What's up, bosses? Welcome back to my channel, and in this segment called Real USA Connection, I talk about real estate here in the United States with information and knowledge that can help you make better decisions. And today I have a very dear friend of mine, Paulo Brum from Acompanhe Finance, and he's a mortgage broker. He's been on this market since 2008, so he can talk about today, he can talk about 10 years later, before today. And I really want to discuss this with you guys because there's been a huge change in the mortgage market at this moment, both for residential and commercial loans. And I think this is a crucial moment for you to have the best information. So first of all, Paulo, in 3-5 minutes, thank you very much for being here, and just talk about a little bit of your history because it goes very long backwards, and that's a lot of experience for everybody.
Yeah, that's true. Thank you, Daniel, for the presentation. Actually, I started in the business in 1993 as a realtor back in Chicago, and then since then, I've been working in Chicago. Then in 2000, I got my mortgage license in Chicago as well, Illinois. And in 2005, I moved to Florida, and then Florida, I've been here acting as a mortgage broker as well. I've been to Brazil, spent 8 years in Brazil as a realtor, commercial realtor. Back 2016, back in the business again. I think this business attracted me. There's no way I can move out of this, right? Yeah, I've been through all the waves on the business. That's when I moved out from here in 2007 because I saw 2007 I saw the thing what's happened at the time. So that's when I decided to move back to Brazil, and then what happened in 2009 and 10 afterwards. So yeah, I've been in this business for quite a while.
That's very important for what we're going to discuss today. And before we do the parallel, comparing what's the situation right now and how was the situation there, and try to figure out if it's going to be that bad, it's going to be worse or better. Just let's discuss a little bit everything that is happening at this moment, the mortgage, overall, the loan business, the lending money business. Because as we were talking before this, looks like every single second there's a new guideline, a new rule, a new understanding what the lenders are going to do. So before everything, how is the residential market being affected by this in the mortgage side?
That's a great question, Daniel. Let's put this way. Let's start before this mess. I said like two months ago.
Mm-hmm.
That's from the past 2 months. How the market was. The market was on an ascending position. On the purchase side, there is a graph showing that even though the rates are still going up and down during time, but the mortgage side is still going up. So it was a really healthy market. It was not jumping up, it was not steady, so it was really healthy and growing.
Even in real estate sales, just to add another information, January and February of this year was much better than last year's in real estate sales. So that confirms what you're saying. The market before anything happened was very good, very good.
Mm-hmm. Exactly, that's true. And even though sometimes when the rates went up, the market's still going up. Drop a little bit, but it's up in the air. So the property of the value will be increasing little by little, not jumping, and then people get mortgages. So, and even the same thing, the mortgage business. We have the first 3 months of the company on the residential side. I worked with a PRMI. That was the best the last years. So right now we're talking about a drop of about 30 to 40% in the business of the company.
Yes, just also as an indication of a healthy market, because everybody was discussing a bubble in the last few months or years. The 5 years prior to the crash started happening in 2006, 7, and 8. We were looking at an appreciation of an average per year of 8 to 10% on the housing market. And right now, before this health crisis that become an economic issue, the growth of the prices for the houses was about 6%, which is the average of the American market, the US market. So there was no bubble. What happened was from 2007 to 2010, the previous bubble burst, and it took almost 12 years to just recoup that. So we were on a trend of 12 years, more or less, of growth. So it was not a bubble, it was a continuous and health growth. And the same thing was happening in the mortgage business. But what happened next? What happened from mid-March to now?
Yeah, exactly. From that point on, when we say that the coronavirus came up, and then definitely you can see like large mortgage lenders. I mean, they're losing their stock markets. I mean, everything. What happened mainly was that the lenders. I mean, right now, let's say you start with the conventional loans, which is the government programs, conventional FHA. I mean, USDA. VA, all those loans. Those loans, I mean, they start to get restricted. They're still funding those loans. They're still doing that, but they got restricted right now. As I mentioned to you earlier, today I just got another email saying that now refinancing cash out is only 70% LTV. So before you could go up to 85. Mm-hmm. So they cut down. You know what I mean? So they really start to get tight on issues regarding credit scores and all that. So then we have another segment, which is we call non-qualified loans, that the loans that we do, like bank statement, the SCR, no income verification for investors. That segment of the market is gone.
Foreign nationals also?
No, foreign nationals still some very minimum lenders still doing foreign national, okay, minimum, but still there. But bank statement, there are some lenders. I don't want to say 100% is gone, but I would say 90% is gone. Only those 10% lenders, the rates will really skyrocket. Then there's a bunch of questions. I mean, we know that when a loan, right, that we're going through with some clients, that every time the lender asks for something else. So what's happening now is that those lenders, they're really close. A lot of lenders close down their doors right now. But the main difference now is like they close doors, they close their business just to step out of the market. Mm-hmm. That's it now. So things got restricted. They're still doing some loans. I mean, we're talking about business right now, down like a 40 to 50%. I mean, but we're still doing refinance, still doing some construction loans, but really harder now this time than was before.
And for what I know, and you can correct me if I'm wrong, different from what happened in 2007 and 8, which was one of the main things that helped to escalate the problem, was that at that moment banks were just going bankrupt, and also since people start paying their mortgage, the banks were enforcing the foreclosure at the same moment. So what happened in the next 3 or 4 years was the banks had so much properties available that when they put it on the market, the prices, of course, went down also. For what I am understanding at this moment, two things are happening. Number one, there's a moratorium on foreclosure for residential properties at least, and the banks are also in some sense helping the mortgage, the people that have mortgage, to extend their contracts or to take the 2 or 3 payments that they are behind and sending it back to the end of the contract. So trying to help out, because the last thing I think that the banks want is another 2008. So they are doing everything that they can to help a client that may be able to pay later and avoid foreclosure. And after the foreclosure, there's the process of flooding the market with property. So how is that aspect at this moment?
Mm-hmm. Let's go back in 2008, 2009, that when things started happening. So what happened, the banks at that time, they didn't think that that problem was going to persist for a long time. They didn't think, they thought that the crisis is going to be over soon going to be over, but actually not happened. So they kept lending money, they kept lending money, you know? And then when the foreclosures start, people stop paying their mortgage. They said, no, that's your problem. I don't care. I'll take back the property. But they didn't realize at the time the price was really high. I mean, it was like extremely high for the loan. And then when it started foreclosure, the price dropped like 50%. So the bank had a lot of properties on the portfolio, and it worth less than what they lend. So that's why the bank started breaking up apart. I mean,
Yeah, and they were lending like 100, 120% of the property value.
Over the price, exactly, over the price of the property. So like Lehman Brothers, I mean, one day they shut down. So that's what's happened. Now it's different because what the bank is doing right now, the first thing they do that we mentioned about the payment called forbearance negotiation.
Mm-hmm.
So what they're doing, you call them and you call the lender. You ask them for forbearance for 3 or 4 months. I mean, usually they start with 3 months. There are ways that they don't do that to put it back of the mortgage. You have to pay that back during the period. If you do that to pay it back of the mortgage, to put in the back, you have to ask for a loan modification. That's a different process.
Mm-hmm.
So what they're doing, the way is like after 3 months, you're going to sit down with them. That's the way I can pay. I can pay the mortgage now, and I can pay this and divide in 10 months, whatever. I mean, so add to the mortgage. So, which is fine. At least you have 3 months to breathe and 3 months to think what you're gonna do. So, banks right now, they're really avoiding 100% of foreclosure because they know what can happen. They have no intent of doing that right now. So they're gonna work with you. They're gonna work with the mortgagee, so they can get their money back one way or the other. And if it doesn't go the way, they might do like they might offer a change in the contract, whatever. So at least to accommodate that. So they kind of know what they're stepping on right now.
And just to add numbers here or statistics that show how good the market, how healthy the market, not good but healthy the market is. At the time that we started this process in March, more than half of all homes in America had at least 50% equity. So there's a huge contrast from what we were saying that the banks back then in 2008 were lending 120% of the property value. Now 54% have at least half of the value of the home in equity, and almost 40%, 37% of all homes in America today are free and clear. So the leverage that the financial system have on the housing market at this moment, it's not even nearly what was in 2000, comparable to what was in 2008. So that takes away a little bit of that fear of a total crash that we saw in 2008, but doesn't eliminate the fact that, of course, we have unemployment, we have people that can't pay, and of course there will be foreclosures. But there's a lot of people that is concerned about the price of their assets going down, and investors looking for a 20 to 50% reducing of the prices to try to buy something new.
Exactly. And what the banks are doing right now, then they close their doors, but they still have money to invest. They're just stepping out of the market right now.
Yes.
But they're not broke. That was what happened in 2008. They have money. They have a structure. They are prepared. To when things go back again to reopen the market again, they have the money to start.
Yeah, they learned.
They learned the hard way, but they did. Right? Unfortunately, that's us.
And the public and the home buyer learned in an even harder way. But how is now in the other side the commercial lending for projects, for land, for everything else that is not residential?
Well, I would say Not different. I mean, there's still some lenders over there. I had a case, you know about it. We are supposed to close on Monday. The previous Friday they said, sorry guys, we're not lending any more money, right? The construction. So, and then now this bank, we heard today that pretty much they're closed now, right? They only
Yes.
service the mortgage they have, which they're trying to sell out. So, but still some investors over there. But and then what they're doing, raising rates, they're charging points. This pretty much was a regular lender, and then they got into the hard money lending and kind of switched to a step up. So now, it's only me doing this business. I'm going to charge whatever I want. And
Yes.
that's my call. I mean, there's no competition for those people. It's really hard. So it's still doing some business, but harder and costly.
Yes, and not even that. The process is taking much longer. We have a deal going on, as you said. On Friday, everything was fine to close. On Monday, they just called us. Look, we're not doing anything now. We need to move forward, and we are almost 60 days. And they keep asking question. What about this and that? So they are much more diligent, which is good in one side. But for someone that is like me, I got caught on my guards in 3 projects. I was in the process of renovating 3 mortgages, 3 construction loans at the same moment when the coronavirus happened, and everybody that we were working with just said, I'm sorry, I can't do it right now. So that became a problem. Because there's not a lot of people doing, and there's much things. It's taking a lot of longer time. And let's talk about the future. How do you see the industry in general getting back on track for the foreseeable future, for the next 6 or 12 months?
Well, I was in a conference call with the Mortgage Association a couple weeks ago. The specialists, they have in mind that in about 8-10 months, most like a year from now, things are going to start going back. But it's going to take some time, not those 10, 12 years that, I would say like 9 years almost, for the industry got back in 2008. So it's going to come back. As soon as the economy start going back in again, people getting their jobs again, I mean, get structured, I mean, that's when the blend's going to open the doors again.
So what you mean is that the situation is going to be more or less like is right now for 1 year, or in 1 year we are going to be back as we were 4 months ago?
No, we're going to come back, open the doors. I mean, the expectations start in January, but I would say by March next year, it's going to be normal again, but it's going to pick up again for another 4 or 5 months.
Okay, so in the next 4 or 5 months, the changes actually are going to follow the opening of the economy, right?
Exactly. That's going to do it.
I was talking to a guy.
Soon it's going to be sooner. I mean, so.
I was talking to a guy in another bank in February. No, in March 13, he sent me an email. Then we are not doing anything for the next 30 days. On April 23rd, I sent another email because it was 1 month later, and he said, Daniel, we still don't have any idea what was going to happen. So. We are not going to pursue that side, because also the banks, a lot of the banks are very busy just putting away, giving flow to the SBA and the PPP loans from the government, which is everybody's requesting that. The small business are requesting this, so the banks are channeling their efforts to that. So do you think then we are going to be like this for the next 3 or 4 months until something new happens in the economy, and after that picking up little by little for January, maybe March of next year, we are a little bit closer to what we were in the beginning of the year?
Exactly. I think the next few months now, either the land is going to be tidying up their stuff, but I believe they're going to be the same. The lender who's still there is going to be there. Whoever left the business is going to be out of the business. They won't be back for the next 4 months. I mean, they might see the economy going back. Once they come back as well, they're not going to have the same products they had before. Mm-hmm. They're going to start tighter. I mean, I mean, with more conditions, with more lowest LTV. I mean, a lot of more detail on how they're going to lend their money. They want to make sure they're going to get paid. So
and what's your recommendation for the people that have a mortgage at this moment and they are behind a month, 2, or maybe 3? What do you think is the best approach that they should have with their lenders, with their banks?
yeah, even though, I mean, you should call the bank and ask them for forbearance. That's the first thing. If it's like a residential loan, that's it's gonna show in your credit that you ask for forbearance, so it's gonna be there. It's gonna hit you. It's gonna hurt you for the next 12 months after you get everything straight. So it doesn't think that forbearance is something. Oh, you're gonna do is fine. No, it's gonna affect your credit as well. But it's fine. It's better than foreclosure, of course. You know what I mean? So I would say call your bank, negotiate with them. Actually, I did for a client of mine. He lives in Brazil. He's an investor. He bought a property over here. He bought a condotel in Hollywood, and the hotel closed down. So that was the income he was making there to pay his mortgage, and now, I mean,
there's no income to pay the mortgage.
There's no income, and there we are in Brazil. It's like almost 6 right now, 5.5, right? And then with expense for him to keep sending money to here. So they gave authorization. I'll call the bank, and I negotiate 3 months forbearance with them. So that's the best way to do it right now. At least we have 3 months to see how the economy is going, think about it, and then restructure it. Call the bank again. The bank does not want the property anymore. They want you to keep your house. They're going to do the best they can do to do that. So that's the best way to do it. Negotiate with them. They're open. I mean, it took me about 3 or 4 days to get a hold of them because you call them like 2 or 3 hours on the phone. I mean, holding, and then until the day I got them and got them straight. So that's the best way to do it. I mean, or refinance wouldn't do any good. I mean, unless you'll be able to have an equity in the property, you'll be able to prove that you're still working, because that's what happened right now. A lot of people lost their job, I mean, but still working, and then you get a condition to lower your payment, so you gain a couple extra months, or maybe do a cash out to hold some money on the side. I mean, that's some options in there.
Very good, Paulo. Thank you very much for being in my channel one more time.
Yeah.
And I think that kind of information it's very important for everybody that's on the real estate market somehow, either building, either trying to buy something, or they already bought and they have a mortgage and they don't know what to do at this moment. So thank you very much.
Absolutely. Sure. You're welcome. Anytime. Thank you.